Welcome back to Starting Gate. Opportunities amidst uncertainties. That is the short but sweet title of Colliers Philippines research note on how the property sector will fare this year. Well, here to talk us through it is Richard Raymundo. He's a Colliers Philippines Managing Director. Welcome to the show. Very good to have you, Richard.
Good morning.
And welcome to the Philippines. I know you're a repatriate. Let's get right into the numbers.
Yes.
When it comes to the office market, this is the big takeaway for me in your report. You say that the industry will stay afloat despite slower take-up from BPO offices. Where is your optimism coming from?
We were surprised with office. Like mid-2017, last year, it was a bit shaky. And then we saw a big rebound in the fourth quarter. So that was very exciting for us. We saw that vacancy rates are still low. We probably ended the year at around 6-7%, definitely single digits. That's still very low. We have the highest take-up historically of around 600,000 square meters net take-up of office space last year. So that bodes very well for the office sector.
And you see this trend continuing on throughout the year?
Very good indicator. Buildings which are supposed to complete this year has about 30 to 40% pre-commitment rate. So that is a very good indicator already that there is strong demand for these buildings that are not yet completed.
Well, when we look at your how the subsector is broken down, we'll see that non-BPOs are now the key drivers for office space. This
Correct.
is based on your research.
Yep.
For 3Q leasing. You can see non-BPOs are taking up the largest slice of the pie, followed very closely by offshore gaming, voice, then KPO, voice, and government.
Correct.
Are these structural shifts in the market?
It's interesting. You know, like if I was talking to you about 2 years ago, KPO and voice would have been
right
60,
there at the top.
70%
Right. Yeah.
of this. Gaming would have been 0. This just came last year. So we saw 25% of that take up from gaming. Non-BPO is interesting. That is traditional office. So they are now expanding. They are now consolidating their space. They're now going to new office space because they weren't able to find good space before because of the vacancy was so tight at 2-3% before. Now they're able to find good space and consolidate. So that is good news.
Are these largely local offices or foreign
It's a mix. It's a mix. So we've seen local offices expand, and we have seen foreign companies, multinationals, starting to expand and consolidate. So that's very good.
So the optimism is across the board.
Correct.
Offshore gaming. Talk to me about how sustainable you think this trend is.
We've seen a lot of growth. There's about 50, a little over 50 licenses that were given out. Each of these license holders do get a good amount of space in this market. So we have been seeing huge take-up from offshore gaming. I think that should continue this year. We've been talking to a lot of tenants, and they're still expanding, and they're still looking for space. So that should be very good for this year.
All right, Richard, let's move over to the residential side of things. You've mapped out actually the specific drivers for each of the subsectors. And one of the things that struck me about this chart is you say that in the residential space, the key driver will be dorms. And true enough, you know, if we look back at over the last 12 months, the stories that we've covered about how Ayala is planning to build 5 dormitory buildings across Makati and BGC. You've got SM partnering with My Town. Who else is getting in the game? What are you seeing here?
You know, what's interesting with the dorms is it used to be a mom and pop player kind of thing. Now that Ayala and SM is in, they now have the scale. So the key to this sector is getting to a scale, to the numbers, to a big portfolio. Having 1 dorm or 2 dorms doesn't really make that much money. But once you're an Ayala and SM, then that makes it interesting for the dormitory market, for recurring income.
What do you think these big developers are seeing? What kind of opportunities are they seeing in this space?
I think what the developers are now looking at is balancing their cash flow or their income, a good balance of recurring and one-offs. One-offs meaning sale of condominiums, recurring like dorms, retail, hotels. So they're now starting to balance their income. If you see how Ayala is doing it, how the other developers are doing it, they're not becoming a one-note developer. It's a portfolio of different uses right now.
Diversification is still the key here. Do you think these dorm projects, complexes, will stay within traditional CBDs like Makati and BGC?
Two good markets for that. You have the CBDs or at the fringe of the CBDs where the land values are cheap, and you can do that. The second one are university belts. So you see that in Katipunan, you see that in the university belt, near LaSalle and all of that. That is interesting. So two great markets for that is students, workers.
There's still demand in the university belts. I mean, there's traditionally a lot of condominium complexes already.
You see good demand. So if you look at the developments which were completed along Katipunan, along that area, we have been seeing very good take-up. Developers that have gone there, Philinvest, Rockwell has recently launched a project last year, doing very well. So that is an interesting market.
Well, here's an interesting question for you, Richard. If the government does succeed in alleviating traffic to some extent, do you think dorms will still have a big market here in the Philippines?
I think if you do differentiate your project, if it becomes not just a dorm, if it has a retail component close to it, if it has entertainment close to it, and then you have the work close to it, then it becomes a live-work-play. And that is how you differentiate it.
Good point. And lastly, Richard, you say that developers as well should take advantage of opportunities arising from reform policies, the biggest of which is, of course, tax reform.
Correct.
Where specifically are these opportunities?
Well, you could have some effect on retail. Hopefully, the additional disposable income that it frees up will have some effect on retail. So hopefully we're seeing that.
What kind of
probably
retail are
on
we
the
talking
food.
about?
Well, if you look at the ones which are doing very well, food and beverage has been moving. Health has been going up. And surprisingly, travel. Retail, which is related to that, is doing very well.
And geographically, where's the growth going?
We will bet on Cebu. That is still the second after Metro Manila where everyone looks at. It has the scale. All the major developers are there. All the giants are there, as we call it. You're now looking at the north. Close to Metro Manila, look at Bulacan, Pampanga. But don't forget about the south. So we're seeing land values going up in Laguna, Cavite, and Batangas.
All right. Fantastic insights. We're going to have to leave it there. Richard Raymundo, Managing Director of Colliers Philippines. We thank you very much for your time today.